Hi, I'm Jenny Brown. Welcome to this week's MFB News. I hope you are keeping incredibly well. And if you haven't had the opportunity to get out and enjoy some of this incredible sunshine over the last couple of days, that you managed to do so over the weekend, what a treat to see the sun at last. Now, in terms of what we've got for you this week, we've got our usual update on lender pricing. Then I'm going to talk to you a bit about what's been going on with the cladding situation, some news that's come out from government in the last few days. And then finally, I'm just going to give you a brief update on some property market news as well. Okay, so you won't be surprised to hear that the general trajectory of mortgage pricing continues upwards. So this is what we've seen. So first of all, TSB have added some new 2 and 5 year fixed rates to their product set. Now, you might recall a couple of weeks ago I mentioned that TSB had withdrawn their 2 and 5 year fixed and not replaced them. Now they've done so. So essentially what was going on there, I would imagine, is they were simply looking to finalise their pricing matrix. So they pulled the products because the ones that were being offered were essentially so low they were costing them money as a lender to offer. They hadn't got their new pricing sorted out, but they've now managed to do so. So TSB pricing now starts from 2.24% on 2 year fixed and 2.59 on 5 year fixed rates. TSB is a lender, very much a sort of vanilla high street type institution. Think kind of BM Solutions. That would be a very similar type of organisation. So individuals only, no more than probably 10 properties in the background, mortgage properties I should add. Not looking for anything racy, but look, if you've got a sort of good, clean sort of situation, the properties are relatively straightforward, then TSB can be a good option for you there. Now, we've also seen the Leeds Building Society introduce cashbacks onto their products. The cashback amount, I think, in terms of what's available on the rest of the market is relatively small, so it's £250. But with the Leeds products, they have free valuations plus a £250 cashback. Pricing here, 2 year fix from 1.92, 5 year fix from 2.19. So just cast your mind back to what we said about TSB, then you'll be able to do the maths and recognise that the Leeds rates are significantly lower. Leeds, again, another lender, individuals only, no limited companies. They do have some appetite for small HMOs. They can consider holiday lets. Again, this is a sort of different product set. They do want you to have income that's not from property. They're not looking for landlords with large portfolios. But again, for those landlords who have between 1 and 10 properties, income away from property, which really kind of scoops up the majority of landlords, some really good pricing here. Now, we've also seen Foundation Home Loans introduce some new limited edition products. They're absolutely fine. I don't think they're kind of earth-shatteringly good. 2 year fix from 3.09, 5 year fix from 3.14. Now, keep in mind that Foundation are a specialist lender, so we're talking about limited companies, landlords with really large portfolios, no minimum income requirements. They can also consider HMOs and multi-units. So their pricing is going to be more expensive than the Leeds and TSB type lenders. But where this sits in the market, you know, so 2 year fix from 3.09, it's not a bad price. There are lower rates available, so just be aware of that. Now, we've seen Zephyr Home Loans increase their pricing. Their rates now start from 3.19. Again, Zephyr are a specialist lender, so you're looking at those kinds of... I think it's fair to say, look, if you're looking for limited company mortgages, HMOs, multi-units, you're a landlord with more than 10 buy-to-let properties, generally speaking, I think 3% is now your kind of starting mark in terms of rates. You might get slightly under that on 2 year money or very low loan-to-value arrangements. Now, we've also seen the Mortgage Works increase their rates and release some trackers. So their pricing now, so fixed rates are now from 1.59%, which is, again, very, very good. The Mortgage Works, for these kind of lower rates, up to 10 properties in the background, there's no minimum income requirement, and this is for individuals. The Mortgage Works do have an offering for landlords with larger portfolios, and also for limited companies, the pricing here is higher. They've also launched a tracker. Now, this is something that I found quite interesting. So the tracker rates, so it is tracking Bank of England base rate, now available from 4.74%, and they have ERCs. So to my mind, I can't really understand why anybody would want a rate which is linked to base rate, which is obviously very much expected to increase, and you'd have to pay an early repayment charge. I'm sure there is a logic behind this offering, but I don't know what it is. Now, we've also seen Vida Home Loans remove their limited edition products. They had a couple of not bad products, rates from 3.19 on the limited edition options. These have now been withdrawn. I guess Vida probably just got to the point where they had lent enough money on these products. Their kind of tranche was used up and they've pulled them away. They haven't replaced them just yet. Okay, so keeping on with lenders just for a moment, I reconnected with a bridging lender that I haven't spoken to for a few years. And actually, the offering that they have brought to the table is really, really interesting. So I wanted to just share it with you. First of all, in terms of bridging finance, so I know that when I first started in mortgages, which was a really long time ago now, bridging was kind of something that people would avoid at all costs. It was kind of a really nasty part of the market. People were really worried that, you'd have guys coming around with bull mastiffs to your house if you didn't pay it on time. It was really kind of regarded as not a very great part of the market. It really has evolved since then. So we have large companies, so for example, Shawbrook, Precise Mortgages, Interbay, all these kind of larger institutions are now offering bridging finance one way or another. So actually the market has kind of really evolved, it's professionalised, and the pricing has come down massively as well. So what we found now is that people who maybe traditionally would have run a mile from bridging finance are actually much more open to using it, just because it's a much more kind of bona fide, sort of monitored part of the market, and people are much more trusting of it. And we tend to find people use bridging finance. It's either going to be really for refurbishment, so whether you're buying a property that you're just going to refurbish, or whether it's something which just doesn't have the right EPC rating to be lettable, and it just needs a little bit of work to get it up to par. And also people still very much use bridging finance for auction purchases. If you've got 28 days to complete, bridging finance can be incredibly fast, so people tend to rely on it for that. And there are some other uses as well, but these are kind of the two key reasons we see people using bridging for. So the lender that I was talking to the other day have got a couple of things they're doing which I thought was really interesting for those of you who are probably thinking about doing some kind of refurbishments. And I think it's fair to say that landlords are definitely turning their attentions more to refurbishment projects, particularly light refurb. So first of all, this lender can, on normal bridging terms, lend you up to 85% of the purchase price on day one. So if people are looking for a straight bridging loan, they can give you 85%. During the sort of very start of COVID, when people started reining back their criteria, we found the bridging lenders went as low as 60%. Normally in sort of traditional times, they sit at around 70 to 75% loan to value. So actually a bridging lender that's 85% is very, very good. Now the other option they've got is a refurbishment bridging loan, which I find quite interesting. So what they can do is they can advance 75% of the purchase price and up to 100% of the costs of the works to the property, as long as this figure combined ends up at being no more than 75% of the gross development value, GDV, the end value of the property. So for those people who have actually found a project which they think is really, really good, they're really, really comfortable that if they do the works, they're going to see a large uplift in value. They simply haven't got loads of cash lying around to be able to fund the cost of the works. This can make a really, really good offering. In terms of the pricing these guys are charging for their slightly more kind of ambitious offering to the market, actually their rates are very much on par with all the other kind of more traditional bridging loans available. So I thought this was really worth sharing with you. Okay, cladding. So last week, appearing before MPs on the Levelling Up Housing and Communities Committee, Michael Gove has said that people who own multiple properties would not be protected under law from future costs of remediating unsafe cladding. So those people who have got more than one property will not enjoy the same protection around the costs of kind of making good properties with unsafe cladding that those people who own a single property, so essentially landlords. Now also Gove warned that developers and manufacturers who refuse to fix the cladding issues could be blocked from the housing market, adding that leaseholders should not have to pay for the work. Now there's a professional body called Property Mark, and a chap called Timothy Douglas from there has made some comments that I just want to share with you. So what he says is that assumptions have been made about buy-to-let landlords' wealth, and he's called on the government to ensure that they did not pay for a crisis he claimed was not of their own making. He went on to say that the broad assumption that has been made about the financial status of buy-to-let landlords shows there is more for the UK government to do to fully understand the private rental sector. They're assuming that landlords with more than one property are of significant wealth and therefore have the means to contribute without support, and this can have a negative impact on the amount of time it takes to make buildings safe and to fail to restore full confidence in this area of the market. So I think for those landlords who have got the properties where there is a problem with the cladding and waiting for remedial works, this is going to be a real blow. At the moment, as it stands, things are still very much going through Parliament. There's much discussion, nothing is set in stone. But for those landlords who are in this situation, this isn't going to be some good, welcome news for you guys. Lastly, house prices. So the average asking price for properties coming to market has now surpassed £350,000, and this is according to Rightmove. Now, I think when we're talking about house prices, there's really two sets of numbers that people work to. There's asking prices, i.e. how much we list the property for, and then there's sold prices, i.e. what you actually get for the property, and these can be two quite different numbers. So what Rightmove are referring to here is how much properties are coming to the market for. So the average price of a property coming to the market has now exceeded £350,000. And this monthly growth is largest seen at this time of year since March 2014. So Rightmove has said that rising house prices are being stoked by the greatest imbalance between buyer demand and number of properties available for sale that we have ever measured at this time of year. Now, what they have gone on to say is that actually, whilst there is clearly very much a shortage of supply at the moment, there is real expectation that more houses will come to market over the coming months. And this, balanced by the increasing cost of living and general nervousness around the market, should really slow down demand, which means that they're expecting house price growth to really start to level off going into the rest of this year. So I suppose really what we can take away from this is that actually, despite everything that is going on, so far the housing market is remaining incredibly robust. There is no expectation for house prices to go down. I know lots of landlords are sort of sitting there biding their time thinking there's going to be a crash. Look, you know what, if that happens, then, you know, well done you guys for calling it, but actually no one in the industry, none of the economists and the property experts are expecting this to happen. So if you are thinking about buying a property, actually just know that, you know, now is as good as time as any. And that's everything for me this week. Thank you as always for joining me. As always, if you have any questions, we'd love to hear from you. 0345 345 6788, or go and have a look around on our website where there is lots and lots of wonderful information. Until next week, do look after yourselves. I hope you get out and enjoy the sun before it disappears and it gets cold again. I'll catch you next time. Take care of yourselves.